this is John Kvale, and this is our October Capital Market and Financial Planning Review. This picture is a little bit of a parody. AI did it. I'll see if I keep it or not. Don't want to offend anybody, but it's really, it was just asked to make a funny picture about the government shutdown, which is not funny, but we're trying to bring some humor in it. So let's get going on this. Again, we are moving through the year. I'm actually recording this on November 1st. And so wanted to review October. We just got through Halloween safely. And for those of you that are newbies, which we have a lot of, keep your hands on the wheel. If you're driving down the road, because we do this in a video, audio, semi-podcast-like format. It's not near as long as a podcast, being a huge podcast fan. But I do like to give some granularity to what's going on to this, and I can hit the high points of the month. So it's to be really a good review for me, and I try and keep them in the 3 to 5 minute zone, and I think this one will definitely be in there. Another funny picture, I may put that picture up as the splash page for those of you that are really paying attention. Okay, government shutdown is going on today. As of today, it's 32 days, and I'll talk about this a little bit more later in the post. 0.04% economic drag per day. That's how much government spending, of course, is a important vein to our economy. Now, I did hear an update from one of our research providers that 80% of that will be made up in short order. So what does that mean? Well, that means that even though we have 1/12 of whatever that percentage is, 1/12 approximately of a year's worth of economic benefit taken away, 80% of that will come back in really short order and get caught up. That's a good thing. That'll figure into something here potentially in our fixed income, and we'll talk about here in a second. Okay, let's go to our financial planning tips. Those of you that are in listen-only mode, I am scrolling down. And so the financial planning tip I talked about earlier on in the month, and I had an update from a nice person, one of my longtime friends, and was kind enough to share, hey, there's a QR code scam going. Cyber scams continue. I actually have a funny post that may come in after this. It's not funny. I fell down while I was jogging, and it was a reason to update my technology, so I got a watch that had a better battery life, but more on that later. But the reason I'm talking about this cyber scams is we need to keep our software updated, and cell phones are no longer, as you probably know right now, cell phones are easy to find. I don't know how they find our numbers. Maybe somebody much smarter than I in the tech world can tell us, but they get our numbers, they text us, they do text scams. So be careful, stay away from those, stay away from fake QR codes, and most importantly, update all of our softwares. Okay, COLAs and required minimum distributions. COLA was 2.8%. That affects not only Social Security current benefits, people that are currently benefited, but those that may be taken in a year or 2 or 20 years, you also get that increase. So your benefit, if you pull down your statement, your benefit will be increased by that. It may not show it immediately. Your statement will probably reflect it next year, not right now. But those on Social Security get a 2.8% cost of living adjustment. And secondly on this, in the final third point of our financial planning tip, and that is it's required minimum distribution season. So we kind of thread the needle to get late in the year to earn as much after tax, our pre-tax dollars as we can, tax-free dollars, I guess you call it. And we true up everybody, and we true up everybody to make sure they meet the requirements. So that's going on. If there's transactions for those clients that are listening to that, that's what's happening. All right, capital market updates. Trying to keep this short, so I've bundled a lot of things. The aforementioned shutdown also causes no economic reports to occur. So those of you in listen-only mode, I'm going to go down the Fed funds charts. Interesting. I just did I believe this was a 3-year chart, and if I go back to 5, this is hardly even moved because we had this is the Fed funds rate. Sorry, y'all. This is the Fed funds rate, and what I wanted to do is graphically show this. So we've had we're at 5.5. We've down. Now we've done another 25 basis points. Just recently, within a couple of weeks, and that's what this is reflecting. So what does that mean? Well, it means the short end of the checkbooks, savings, things of that nature has come down. The long end of the yield curve, which would be most represented by this 10 and even a 30-year, was disappointed that the Fed did not signal that there were more rate cuts. Most likely, back to what we talked about, once the shutdown is over, it wouldn't surprise us to see a little pop up in rates as the basically as market participants start to digest, well, we've got this big catch-up coming. But then eventually we feel like rates are more normalizing. We're going to have potentially lower rates going into the first quarter of the year. So we may have a little bit of bouncing around. This didn't surprise us, these moves up. What did surprise us is that this shutdown has lasted as long, and so we're coming from a lower level. What does that mean? That means, and I'm working on the newsletter, that means that eventually we should get lower mortgage rates. We're seeing lower mortgage rates right now, but really much lower mortgage rates. So a little bit dicey. There's always seems to be something in there to stir it up and make it a little bit more challenging. So that's it. We'll see if we go with these with the pictures. And I think you all, I've gone almost 6 minutes. So it goes, when you're having fun, time flies. Thanks a lot. We'll talk at you at the end of November. Take care.